Join us now on the markets. Tom Lee, head of research at Fundstrat Global Advisors, chief investment officer at Fundstrat Capital. And the list goes on and on. Andy's a CNBC contributor. First post-election appearance that we've had. You knew Trump was going to win.
Well,
not many people did.
Yes, that's.
I'll give you credit. Are you saying you didn't? Maybe you didn't say it in so many words, but you said it.
Yes, I'd say that we were placing a lot more weight on what the betting markets were pointing to, and so and we, when we look at all the deltas,
and you saw it in the Trump trade, yes. And you saw it in Bitcoin,
correct,
and you saw it in sectors of the market that would benefit from.
That's right.
Presumably, but who knows from a Trump presidency. So 1,500 points out of the gate. More to come, or are we're already there?
I think we need to respect this move. I mean, there was a tremendous rally post-election, and it continued yesterday. I think it really does reflect a lot of money was taken out of the market because of the uncertainty around the election. And now we know that because of policy changes and animal spirits, that this is really going to benefit things like Bitcoin and small caps and regional banks and financials. So I do think there's still a lot of upside. I mean, small caps trade at 10 times median forward earnings. I mean, that's a...
So what do you think that should be, 12 times? I mean, what's the opportunity set in your mind?
Well, since 1987, small caps traded on a median PE basis at a premium to the S&P. The S&P is at 17 times. So I think small caps could, in the next couple years, outperform by more than 100%.
And what do you think about some of the macro issues that I think create a different level of uncertainty? We keep talking about the bond market and what that might be saying, what you think is happening with gold. Are the bond vigilantes going to be this governor on whatever you think is going to happen in Washington?
As James Carville famously said, the bond market is, everyone's scared of the bond market. So that is something we need to watch. But we've had plenty of periods where stocks have risen with bonds rising. And I kind of agree with Powell's assessment that it's not yields have gone up not because of inflation, but because there's sort of a change in growth expectations.
I thought that a sweep was, for either party, was the death knell for the markets and frightening to all involved. And now we're getting a sweep. Why isn't it more frightening? Maybe the sweep the other way would have been a little more frightening to some.
Yeah. I think part of the reason investors are getting somewhat optimistic is that President Trump is entering office again, but this time with a lot more knowledge of how to build a cabinet and a team. And so in some ways, this would end up being more market friendly. And I think that's why investors are becoming optimistic. I mean, I kind of agree with the idea that there are animal spirits growing.
In a world where artificial intelligence is revolutionizing industries left, right, and center, one name continues to shine brighter than ever in the stock market: Nvidia. On November 20th, the AI chip giant once again outpaced expectations during their third quarter earnings release, reporting an astonishing revenue increase of 94% to $35.1 billion. This phenomenal growth, however, is just the tip of the iceberg. Nvidia, now valued at a staggering $3.5 trillion, is not just aiming high. They're poised to potentially become the first company to hit the $4 trillion milestone. Yet, what sets Nvidia apart is not just its current dominance, but its unique ability to keep surging forward, even outstripping supply constraints and competitive challenges from the likes of AMD and Intel. The question on everyone's minds isn't if Nvidia will hit the $4 trillion mark, but when. Let's delve into why Nvidia's journey is capturing the world's attention and fueling investor excitement. Welcome back, everyone, to Investocracy.
Joseph Moore. Joseph, obviously a lot of discussion so far on NVIDIA. It's been the talk of the week, not just the morning. What's your sort of overall initial read on the quarter? Does it make sense to you as well that you're seeing the stock price action lower here after that quarter posted and the expectations going forward?
Yeah, I think so. I mean, the narrative here is going to be the ramp of Blackwell, right? And they've used these descriptions of Blackwell of, staggering demand, insane levels of demand. At the same time, your revenue in the next 6 months is still driven by majority Hopper, which is the older product. And, so I think you're going to have less upside for a couple of quarters here while we move into that Blackwell ramp. And that's how we previewed it. We didn't think there would be as much upside maybe as some has thought. And and there wasn't. But I mean, it's still a very good quarter. You beat revenue guidance by $2.5 billion. No semiconductor company other than Nvidia has ever done that. And I think they are looking at a very strong Blackwell cycle into the back half. But it is a transitional period as we sort of move from the later days of Hopper into the beginning of the Blackwell generation.
There was so much to like in this quarter, but nothing is without risk. What would be potential concerns for you as you're looking ahead as Blackwell scales?
Yeah, well, they've talked about lower gross margin, and they did guide gross margin in the first half of next year below our expectations. I think that's largely a function of the complexity of Blackwell, the number of different SKUs that they're going to have out there, the systems innovations that are required there, and wrestling with some of the supply constraints around that. But they did mitigate that concern by talking about much higher gross margins in the back half of the year. So actually, if you look at our margins for the full year, they actually stayed the same, but we lowered the first half, raised the second half, and we exit next year at a healthier rate. So I think that's one of the elements. And again, I think, when you have these transitional windows, we are still talking about a very large number of Hoppers, right? They'll do north of $30 billion of Hopper revenue this quarter, which is a product that has already been effectively Osborned by the next generation product. So I think there's risk around all of that, but I still feel pretty good about it. And I think we're looking at the strength of Blackwell and this kind of scaling concerns, the debates that are out there. I think NVIDIA did a very good job of addressing that and talking about why this will continue to scale and grow into the back half of the year. So, some risk for sure, but I think, 3.6 trillion market cap for those of us who have covered the stock since the IPO is a surprising number, but, they're executing really well and the narrative is really strong.
Hey, the sequential decline in networking got a little bit of a look last night and this morning, but then got written off as noise. Is it something?
Well, they talked about most of the core components of networking being up. So InfiniBand was up, Ethernet was up, Bluefield was up. So my sense is it is at the noise level. I think there's some of the optical component business, as there's a mix shift towards Ethernet, they probably have a little bit less of an optical sell-through. So that's a lower margin part of the business anyway. So the core elements of networking continue to be quite strong. And I think that they talked about networking continuing to be strong into next quarter. So I think, there's mostly noise on that, but it certainly is something that got people's attention.
Finally, the other thing that's getting framed a bit today, Joseph, is, Jensen's been talking about sovereign demand for a while now, but this recent trip to Japan and this notion that is he trying to diversify away from the big four hyperscalers? Is he trying to graduate the perception of that pie? What do you think?
Yeah, I think that there are a lot of sources of demand here, right? I think when you look at inference being close to 40% of revenue, probably over 40% of revenue, and when you look at sovereign demand, as you said, they've talked about that as a low teens percentage of revenue. I think some of the enterprise applications are sort of in a similar mid-teens percentage of revenue. A lot of the focus goes to these mega clusters and the sort of race to have the biggest cluster and people spending tens of billions of dollars. And that probably is the element that as you look out to 2026 has the most uncertainty. But there are a lot of businesses within this that do have quite solid growth potential, including sovereign, including enterprise, including some of the inference parts of the business that, we still have business plateauing somewhat in 2026, but still very good growth prospects, even as we get past this period of the Blackwell product cycle.
Quite an incredible company, incredible run on the stock. Joseph, you upgraded, of course, that target price here today. Joseph Moore, thank you very much for being with us following NVIDIA's quarter.
NVIDIA, the grand wizard of AI chip technology, has been conjuring growth spells that many can only dream of. The launch of ChatGPT propelled NVIDIA into the avant-garde of technological innovation, with revenue growth rates that could make one think they're reading a fantasy novel 94% this quarter alone. It's no wonder investors are spellbound. Yet beneath this high-flying growth lies an intriguing paradox. The company's revenue doesn't even fully represent the overwhelming demand for its chips. This demand is constrained by the ability of Taiwan's semiconductor manufacturing to keep up with production. It's as if every business wants a piece of NVIDIA's Blackwell platform, described as staggering by CFO Colette Kress, and yet there's more need than resources to quench the market's thirst. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account, We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Back to the video.
Your read on the quarter, which was, obviously a beat, sales up 94% year on year. That is a slowdown from the prior 3 quarters, which have just been astounding, and 94% up year over year is amazing, obviously, but what's your take?
I mean, let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by Nvidia, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on Nvidia. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture, all the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest that this just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down today.
Oh, you're buying it this morning?
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the Nvidias of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have Nvidia in your portfolio.
Okay, so it's now your number 2 position.
Correct.
With buying a little bit more this morning.
But let's not overlook the naysayers, the bears who perhaps partook in too much honey and missed the bus. They argue that fierce competition is laying siege at Nvidia's gates. Interestingly, despite AMD and Intel's best efforts to enter the AI chip domain, Nvidia remains untouchable with its CUDA software library providing a moat so deep that it might require a full-fledged Arthurian effort to cross. As CEO Jensen Huang hints at scaling beyond conventional realms in AI models, it becomes apparent that Nvidia's magic isn't prone to fading. Quite the opposite. It conjures newer, more dazzling visions regularly. And as if defeating trolls wasn't enough, Nvidia also aligns its stars with the Dow Jones, a move unlike any before in the semiconductor realm. History whispers a sweet tale. Stocks often soar post-inclusion, adding a layer of enchantment to Nvidia's already gleaming profile. Imagine casting a spell where a 14% surge by year's end becomes a reality. It's less about fortune-telling and more about making well-calculated predictions based on historical data and current market dynamics. With champions of technology and profit backing Nvidia, it appears their realm will only expand. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Josh, what was your take on the quarter? You obviously well known for being in this stock for a very long period of time.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night. The most important thing, and I'd love to hear Brad react to this, is this idea of the moat. because competitors are coming in with new solutions. Amazon is ramping up production of their own Trainium 2 chips. Like, they will not have the whole markets themselves forever, but they can maintain dominance, and it might actually be a good thing for the ecosystem for there to be more products out there. I think that's the tone that was set last night, and I think other NVIDIA longs heard the same thing that I heard.
As we reflect on Nvidia's stellar position in the cosmos of the stock market, it's clear that this isn't merely a trend. It's the beginning of a remarkable narrative in AI-driven innovation. Nvidia's current state, with its solid financial standing and the unstoppable demand for its products, suggests potential far beyond what's seen today. With Nvidia likely to reach or even surpass the $4 trillion mark sooner than expected, it becomes a compelling tale for investors seeking a robust and promising growth stock. Their inclusion in the Dow Jones Industrial Average adds a laurel to their achievements, marking a new chapter that has historically seen stocks gain significant value. In the investment world, where Nvidia's EPS doubles annually, the possibility of continued growth is not a mere dream but a likely reality. This isn't just about betting on numbers or technology. It's about investing in a leader that's shaping the future of AI and computing infrastructure. So, dear viewers and investors, what are your thoughts on Nvidia's meteoric journey? Could your portfolio benefit from a touch of Nvidia's magic? The stage is set. It's time to step on and join the dialogue. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.